Talk markets. Joining us now with what he's watching in the charts, Stephen Suttmeier, Chief Equity Technical Strategist at BofA Securities. Can you, Stephen, explain the lack of volatility, the lack of even a 2% downdraft in forever or move, or how long it's been? What do you really think is happening behind the scenes or underneath the surface?
Well, the market's in the midst of a summer rally. We got bullish seasonality. So I think when you look at seasonality for July through August, it's quite strong on average and even stronger in presidential election years. The other factor I think that might be driving this is there's still a lot of cash on the sidelines. If you look at ICI, total money market fund, net assets, over $6 trillion there. So I think the market is continuing to run up because not enough people are on board with it.
It's almost a continuation of last year's sort of rally that no one really was loving. This year we loved it for a while, I think, but then the skepticism was rekindled because of all the normal caveats that it's all two stocks or it's all sort of based on AI and sort of the hype around that, whether it comes true or not. So it's almost like not a loved rally again, I guess. And is that rekindled enough skepticism or wrung out enough complacency to keep it going?
Sure. I mean, when you look at technical setups here, I mean, we're still positive on, the seasonality, obviously, but you also have that, the cup and handle that you completed late last year. We're thinking we hit 5,600s on a summer rally. We're getting close to that level. So I think we're also in an overbought market, right? If you look, and that sounds bearish on the surface, but it's not. When you're overbought, you grind higher. We use an indicator called the Williams %R. It's momentum. And the reason why I, as a technical analyst at BofA Securities, use that because I know one of my weaknesses in the past was getting out of markets too early. And I found an indicator that pins that overbought when you're going to grind higher. And the Williams %R is doing that in the daily time frame, weekly, and monthly. In fact, if we stay overbought on the monthly time frame for the entire year, I mean, we could have a 20% rally this year on the S&P. And so far, that's what we've been doing. We've been staying overbought. And people hate chasing overbought markets. And I think that's the reason why overbought markets continue to grind higher.
We also heard, I referenced it earlier, that it's a lot of the move is concentrated in a few names. And we've heard off and on, it's broadening out. It's broadening out. But then it seems like it really hasn't broadened out. It seems like we're back to a few names. Does that matter, or is it going to broaden out eventually?
We saw a little bit of broadening last week. There are several sectors that actually outperformed the S&P last week versus just one in the week prior, which was tech. I do think if we are to get this summer rally, we do want to see the small cap index break out on an absolute basis. We do want to see the equal-weighted S&P break out on an absolute basis. The industrials break out also on an absolute basis. The NYSE. I mean, these other indices that have been laggards all year long, believe it or not, have bullish absolute technical chart patterns, meaning that they should go up on a summer rally. So if they do, that would confirm that the market is indeed broadening a bit more. If they don't, then we're going to have another story to tell. Maybe the summer rally is not as healthy as it could be. The other factor is a lot of people do complain about, it's 7 stocks. The Magnificent 7 actually looks more like the Magnificent 4 right now. But when we looked at the numbers last week on the S&P, there's actually 120 some odd names that have beaten the S&P year to date. So it's not just 7 stocks that are beating the index. It's more like 125, 128, somewhere in that range. It should probably be closer to 250, right? But still, it's not 7.